Okay, let's just start. Right now, we'll just start. A very good afternoon, good evening to you guys. I'll read out the risk disclaimer first before anything else. But before that, thank you for joining me. I would like to welcome those of you guys who are here for the first time. It's good to see some very new names. So if you're here for the first time and joining me on this live Geometric Trading Market Outlook, today is the 9th of March 2017, and welcome. We shall then go ahead and share some trade ideas, geometric trade ideas into this session. Okay, so before anything else, just a bit of a risk disclaimer. Okay, risk warning, more or less, and this is how I would like to start it. So Forex and CFDs are leveraged products and involve a high level of risk and can result in the loss of all your invested capital. Okay, therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. Okay, so that's it. Thank you for listening to that. And now we shall then go on to the chart. Okay, before anything else, just to let you guys know as well, I've noticed some what do you call that, movers, top movers as of today. I mean, as of market open early today, London Open. Notice that we've got lots of appreciation of the Australian dollar versus the New Zealand dollar. Okay, and in the top mover section, I found that the AUD, I would say the NZD, it's quite active in traders selling the NZD, so there's a lot of bearishness that does support the claim of a positive, of a bullish AUD NZD. So the first four pairs itself, as of today, loads of selling of the New Zealand dollar. So you want to marry that up with any fundamentals that you can find and look into that. And with that, once you are strong with a trend, then you can then look into patterns like what we have here today for you. Okay, so a couple of things. I would like to change the format of these webinars that run on Mondays and Thursdays, whereby I'll share with you shorter term trades. Of course, I will draw these patterns on the 4-hour or the daily chart and all that, but we would like to also look into shorter time trades, intraday type. Then we will look into what the banks and bigger hedge funds are trading at the moment. So we've got some insiders information, whereby there's a couple of interests today on the USD CHF, buying of the USD CHF. Okay, so I have seen across the board most of the investors are also looking at a at not only buying the USD CHF, but the level of where they would look into take profit would be very close to the 116, not 116, at this area here, at the 0 to 20 area. Funny enough, it's got this pattern here that I have also lined up here. Now it's bullish on the USD CHF, but before anything else, if we go on to the 1-hour chart to look into trend, as you can see, you've got this candles. Majority of candles are above all three lines, and you see that these candles have found quite a number of support onto these lines, either one of these lines, and that's a good sign that it's aiming at bullishness. Okay, so you can look into the angles as well, and you can see that the angle is picking up. Of course, it's a sort of like a 2 o'clock type angle, but in this area here, it's steepening. Okay, it's more slopey and it's pointing upwards much more. So that is quite a good sign that it's picking up on the momentum to the upside. As we move to the 4-hour chart, you could see that it's steeper. This whole movement of candles are moving and giving you that bullish sort of momentum. Okay. As we go on to the daily chart and we zoom in a little bit, you can see that again, candles are above all three lines and they are picking up, giving the momentum of a pickup of bullishness. Okay, and that is a good sign to know that that is what you could then go back to your 1-hour chart or the 4-hour chart, like what I've just drawn. Now, on the 4-hour chart, the ABCD pattern, as I have drawn here, it's quite clear. It's predicting an upward move and some more room to the upside to the 1.0 to 20 area. It's marked on at the 1.0 to 19 area, but this is how I've drawn the A to B line. This is your A to B line, and when you have that A to B line right there, you copy paste or draw another line on top of it, and then you just move it on this way. You get an AB equals CD. Okay, and that's how you predict that move on how high the USD CHF could go to, and that has marked that area there. Okay, so from where prices is at 1.0147. Okay, 1.0147 or 46, it's really close to the 0150 psychological number. So if you want more, a little bit more assurance on whether price could go up more, you need prices to go above the 50 psychological level. That gives you the price of 1.0160. So 1.0160 is the price that you need to wait until it goes to that level to give you more bullish momentum. Okay, so 0.160. So 0.160 now is at 0.147, 0.148, so sort of you know, that range where it's really close to the 50 site number. So this is the price that you could potentially look into entry. Okay, and that's a 0.1, because entry, most investors are looking at entry above the psychological level. Okay, and here we as retail traders could take that as about 10 pips above the psychological level of 0.150. That would give us then 1.0160 as an ideal trading area. If you are looking into the buy side, then that may possibly be your buying price. Okay, so this is where you would mark that in. Now, if I mark that as 0.160, okay, let me just do that. 0.160, and that would be marked off there. Now, if I take that and just give you a bit of an idea where roughly how much in pips, that's about 59 or 50, 58, 59 pips. Okay, that's reasonable for that last bit there. But this last end here has been marked as 0.219, or you can make that as 0.220. So it's best to take your profit at this stage to be before reaching 0.220 by about 10 pips. So that will give you 0.210 instead. So let's just write that down. So that will give you at 1.0210. Now this, upon adjusting it to the psychological numbers, give you an ideal take profit area, 1.0210, 1.0160. Okay, so 1.0160 ideal entry, 1.0210. That is if at all you are looking into a sort of buy, you know, last minute type buy, a small, you know, buy right there, and that buy about 40 over pips or so, and would give you that chance once prices has gone to that level of 1.0160. Okay, now that is what you could see in this stage. Once you have actually zoom out, there is a possibility of a W-like pattern here. When I attach that ABCD into a bigger move before that, that would then give me a W-like pattern. What does that mean? That means that the W-like pattern, once it ends at D, because that's your A, B, okay, CD pattern, and then that's X to A. Once you've got that W-like pattern, that gives you a bit of a how you call that, a PRZ, a possible potential reversal zone at this area at D. So that means that prices may go up there and starting to reverse. So where would it reverse at would actually be then be good to actually pull the Fibonacci numbers from there. Okay, so a Fibonacci ratio, sorry. So if you pull that X to A, now the X to A, you could either have your X right there at the top, this peak, that peak. Also, the X is really flexible. Okay, but how flexible could it be? It depends on where that angle there lands. Okay, so here it doesn't make much of a difference even if I do it there or even there, because it still ends at very close to the 50. So I'll take that. Now, once I've marked from X to A, I then look for my 61.8%, okay, and my 78.6%, right? Okay, then what I do next is I pull my X to my B as well, X to C, and then I do the same thing. I do a horizontal line at 61.8 as well as the 78.6, right? Okay, and I take that off now. All right, and then you'll see that you've got a zone there. Okay, now that is your reversal zone, but when you mark A, B, and then CD, that gives you an approximate area there that it could reverse, maybe a little bit more to the upside, and then starts to reverse. But this does not stop the market from just reversing right now, because this is actually one of the areas, one of the lines. It's starting to reverse at one of the lines as well. So here I would then mark this area here as my potential reversal zone. Okay, so for me, being a conservative trader, I would have exited some time ago. And where would I have bought? I would have bought by first converting this ABCD into a geometric pattern. So you just pull your A all the way to B, and then you get that center cross area. Okay, that center cross area here, somewhere there. Okay, then once you get your center cross area, you mark that. Again, I'll just draw it properly. Okay, there you go. Once you get that, then you would have that. So I would have or have entered at above that 1.0037 area. So 0038 or so. Okay, I've entered there, let's say, and I've probably taken profit just before prices have entered that zone. So way before 0153, probably at 0140, I would have already exited. Okay, so now because this is a Z-like pattern, I would like to wait until more movement coming down and take that sell order and take profit somewhere here as well, 0060 perhaps. Okay, and that is basically how I would be trading from C to D and then D to E to the downside. So for now, me personally, I wouldn't be looking into entering any trade, but waiting for prices to fall further, because this is a W-like pattern. I would then take that sell type trade. The reason why I've seen it as a W-like pattern, mainly because of this volume area. When you go on to insert and then you look into indicators and then you look at volumes and then you click on volumes, you then come up to you will have this kind of an indicator to pop up. And this indicator here, I like to look at divergence, not convergence. Divergence meaning opposites. Okay, opposites meaning, let's say you've got price coming down, then the volume should be coming down as well. But then if you're looking for opposite, then you need a volume that is going up. So if you've got prices falling and falling, but then you don't see that fall in volume, the fall in volume from this side here, for example, has been picking up. So that is a divergence. And then here the ABCD is going up, but then the volume is reducing. So that again, this whole move here diverges, or it gives us divergence to the volume. So that means the price, the way the candlesticks move, is opposite the direction of the volume indicator that you can see here. When you see that, then you can then have that as a W-like pattern. That means that X to A needs to move opposite direction to that volume area. If it does, then you pull that line before the ABCD pattern and make that a W-like pattern. Okay, so a bullish like ABCD, usually if there's a big move before that, that would make it a W-like pattern, so that you are able to get that zone to know that the C to D goes up and there is a point or a zone that it would find its way downwards. Okay, so now it's posing to be a bit risky. As you can see, you've got a bit of resistance, and you got these candles are weakening at this moment. The bullish candles are weakening. You can see all the bullish candles are smaller in size. They got more wicks at the top, and they're finding resistance and things like that on either one of the horizontal lines. So this is the point that you would need to look into exiting and looking into the bearish type movement, because this is for me it's a bearish W-like pattern, and it gives me a chance to trade from C to D to the upside, but then I need to exit before it reaches the zone, and then look into C to D once it goes under that zone. Okay, so this is your USD CHF. Okay, now with the AUD USD, we have got a bit of a potential tip as well. Here, most traders or investors have actually entered. I mean, this is a bearish, I think it is a bearish type, what do you call that, opportunity or trade idea. Most investors have entered at 7590 and they're looking at 7450 as a potential take profit. Okay, so what you can then do if you are a short-term trader intraday is to look for bearish pattern and look at whether or not you can find ABCD to the downside and giving you hints of a target or take profit area at 7450 area. So let's just mark that 7450 area first. Okay, there you go. So you've got 7450. Now they're aiming down there at 0.7450. Now we as traders who understand a little bit about psychological numbers wouldn't take profit at 7450. We would take profit at 7460 because before it comes down to 50. Yeah, so I'll just mark the area that I would like or I would prefer to take profit at 7460 instead. So I'll just mark that there. So this is what the banks and major people, they have entered at 7590, let's say, or even 7500 and things like that. But that's the level that they have looked at, they've entered the trade, but now they have looked at the TP area there. At this moment of time, prices are at 7512. Okay, so it's under the 20. So at 7510 could easily be another selling area as well, or a trading area, because it's under the 7520 side number. So let me just do that. Mark a price there that could be ideally an area to enter a sell there. So 0.7510, let's say. Okay, or for those who are more conservative, then you want to look at 74 and let's say 7490. Yeah, 7490 area. Okay, but 7490 to 7460 give about 30 pips. Okay, so there's a bit of a room, some more room downwards, but if you have entered earlier, then you'll be looking into more profit potential, of course. Now, here, together with what I see, I mean, if I am looking at whether or not whatever signals that's been produced out there could actually marry into my geometric pattern, what I do see is a potential ABCD type pattern of a Z pattern. Okay, so a Z pattern goes something like this. Now, if you go on like that, you take the head part, then the body, then the tail and the head area would usually be almost similar in length. Okay, but that is just an idea. They're telling you that the Z-like pattern, usually there is a potential until this area here, but if you use your Fibonacci, it's usually at 50% of this longer move. So what I'm trying to say is that it may fall to about 50%. That 50% is right there. Okay, as you can see, 7450, right on the psychological number. So that does actually give a little bit more room for it to come down, but a high probability of prices zooming up again or bouncing up at this area here where I've drawn the horizontal red line there at 7450. If at all it goes under 7450, only then it may come under to this area here, which is marked by the D here at 7376, or let's take that at 7380 area. So if it's not at 7450, it is at 7380 area. So that's the window of where prices could fall down to before it bounces up again. But here, if we look left, where it's marked at 50%, it's showing to the left that they've got quite a number of very strong support zones as well. So that is another likely area, another possible or probable area it could come down to and bounce off. But if it does have more strength, more negativity, in Australia, whether it's politics or economy, then you will see that piercing through that zone there and coming down lower. And that is then a more likely area once it goes under that red zone to come up from this area here. Okay, so that's AUD, okay, USD. This is on a daily chart. So let's look at whether or not you could find potential ABCD to the downside, since it's reported to be bearish, okay, for AUD USD. a bearish sort of idea. So what we can do is we'll just get rid of that one there. We'll put that area there, mark that area 7460 there, really crucial area. We need to mark the 74, let's see, 75, 7460. Okay, 7450 is around here, so that's okay. Let's leave it at that. That's the room that it may come down to. Let's go on to the, let's start with the 5-minute chart and look at the trend. Look at how prices has found a little bit of resistance there. It's still being challenged by the 200 moving average. The three moving averages that I use, again, for those who are new here today, is 50, 100, and 200. Okay, I'll repeat that: 50, 100, and 200 exponential moving averages applied on close, all three lines. Okay, so here we see that it found resistance. I think that most likely it would find its way downwards, but again, you've got challenges of these two lines as well. So let's just move on to the 30-minute chart, and then you can see it's still for the AUD USD. You can see that it has found some resistance right there. Okay, as we do that, you could then tell and see that there are probably potential here as well. Okay, and A, B, C, D. And you take that, let's say from here or from here, you can see that there's some room right there as well, okay, for it to fall to. And AUD USD, as we go on to the, okay, 7450 is the aim. I think I've just deleted all the writings right there. I'll just draw that again. I'll just give you that indication. 7450 is what the big boys are aiming at. For a sale, they have sold at 75, let's say 90 or so, but then they're looking at 74.50 as a potential take profit area. Okay, now with the patterns, it is sort of confirming that that is a possibility. Now look at this one here. You have got a potential A, B, C, and I like that to be a C because it has met with either one of the psychological, found resistance at either one of the psychological level that is marked by the moving averages as well. So mainly if you see the resistance at moving averages, you've got a better sort of ABCD pattern that is a bit higher in probability and a bit lower in the risk area. So if I mark that as my A to B, then my C to D, that's basically it. Okay, so that is giving me the bit more room right there. Whether it is or not, we don't know, but at this stage you could see that AB equals CD right on the dot. Yeah, you can see that it's right on the dot right there. So perhaps it's got more to the upside. Okay, but here it says that 74.50 would be there. It may be looking at upward and then down again. But this is a very nice clear example of AB equals CD, and you can see that it has stopped right on the dot of that line of AB equals CD. Okay, let's see the questions. Hi there, Kahindi. PDF, you won't get any PDF copy, Kahindi, but you can, you will get a recording link. Okay, all the seminars, all the webinars, sorry, are recorded, so they are available in the GTI group. What you can then do is send me an email at kenny@fxgeometry.com. Okay, so you can request for that. I will add you first onto the Telegram group, and once you're in the Telegram group, you could probably by tomorrow I will be posting that recording for you. Okay, so no problems with that. So kenny@fxgeometry, okay, .com. So that is my email address right there. Okay, I've sent that to all. So you guys who would like to join the Telegram group that we have, feel free to send me an email at kenny@fxgeometry.com, and I will then add you, you know, onto my group. Our GTI group is really active, and I would encourage you guys who are new to join us. And you've got a lot of trade ideas, and you can ask questions and meet the rest of the guys in the members area. Okay. Oh, good. So we've got ABCD right there. As you can see, it's doing quite well. And if we use Fibonacci as well and pull your A to B, you want to always look at where your C has landed. So the C has landed at 61.8. Usually if the C point is landed at 61.8, then your D could potentially reach 1.618. Usually that is the sort of guideline. Okay, so you pull your B to C and look for the extension ratio at 1.618. Okay, so when you look at 1.618, you can find that it's right there. Okay, so you've got a little bit of room, not very far apart from each other, but that is the projection of where D could be forecast to go down to. Okay, so whether it's got more room or not, it's probably best for you to wait at this moment of time for prices to go under 20 psychological numbers. So 75, 10 and below, then you got more room to come down. Okay, so we need to still wait for prices to come down a little bit more. Okay, all right. Okay, there you go. So that's for your AUD USD, guys. Okay, let's look into USD JPY because we have seen quite a number of bigger buyers, bigger boys. They are still looking into a buy entry for the USD JPY. They have bought at 114.20. Okay, and they're looking into a target of 115.20. Okay, 115.20. So I'm looking at it at the moment at 1 hour chart. So I just want to draw some pattern, give you an idea of whether or not you can see this potential target happening or not. Now, we are looking at trend, and at this moment of time, you've got an upward type momentum because you've got prices above all three lines. I want to always look at it, look at anything, any instruments at least 3 time frames and compare them. So let's say I like comparing them between the 1 hour, 4 hour, and daily. I apply the 3 moving averages, and when I look at 1 hour, I want to know whether it matches with the 4 hour. Does most candle go? Most candles are above all 3 lines? The answer to that is yes. It's found very good support in either one of these moving averages. This is a very good sign, and it's moving upwards. That's good. And let's look at daily chart. Daily chart is signaling the same. It's found support as well, and it's moving upwards, and it's above all these 3 lines. So that's a good sort of trend indication that the momentum is to the upside, so there's more bullishness to expect. So let's go back to the 1 hour chart, and now you can then safely look for patterns or potential patterns, but you need to look for the bullish type ABCD. So let's start from this most obvious move to the very bottom here, from the low here. It went up all the way there, and then it found support at this area here to be the lowest area. Okay, so you can always see that as A, B, and then you've got C right down there. So all you need to do is draw that from A to B. You don't need to be perfect at this stage, okay, and just do that there. Okay, so there is a potential for prices to be moving upwards, right? So we are looking at an ABCD, a bullish ABCD, projecting price to the upside here. So how do we know how far will it go? We'll take the first option of AB's length equals CD. Okay, that's an idea. So that is just an idea, a probability of price, if at all you've got it bullish, you've got more bullishness picking up, you could see it as moving towards this 11665 area, let's say. Okay, and let's redraw that one now, and then we complete that one there here. So you've got an AB equals CD. Now you've got an AB leg, BC, and then CD, looking at that area there. So if at all we're looking at the potential to the upside here, let's redefine that potential target by using Fibonacci. Let's pull now from A to B, and you need to look at where the C has actually landed. Now the C is landed at approximately or quite close to 38.2. Okay, so 38.2 means that it's got a potential of 2.24 or 2.618 as the projection. Okay, it's got a sort of formula or a table that I would share, that I share in the members area of fxgeometry.com. It's not complete, I must say, but it's really close to completion. So for those who are already members and will be members soon, they could have access to all my videos there on each type pattern and how do you look at different areas, different elements and everything else. Okay, so there you would be presented with that table and you'll get an idea, but C point is really, really important. So I've got a very nice C point here, landed on the 38.2. I say nice because it landed at one of this very strong exponential moving average. So if I pull my B to C, I need to then now look for 2.24 or 2.618. So as you can see, my AB equals CD goes right on the dot of 261.8. That's a good sign because it overlapped. The other one line is 2.24. Okay, there you go. So 2.24 right there, and then I'll take that off. Okay, so I'm projecting and forecasting the potential of prices, if at all it's bullish for USD/JPY, to be able to reach that level there. Okay, 116. Of course, it will not move in a straight line. It's going to zigzag up. Depends on fundamentals, depends on a lot of other things like data and everything else, even geopolitics, to actually rise and push that USD/JPY upwards. Okay, so now the question would be, once you've got that ABCD pattern going, where would you potentially enter? Where would be an ideal entry point? What you would then need to do is to convert this ABCD pattern here, as you can see, into a geometric pattern. All you need to do is pull from your A point right to the D point like that. So you've got that funny kind of shape here, yeah? And that is a geometric type pattern. Because once you have attached all lines, that's perfect geometry right there, made up of different types of triangles, as well as the, what do you call that, geometric type shape. So here you've got that shape right there. And that center point, as you can see, marks an ideal trading area. I call it the centroid right there. So if we're aiming upwards, then you want to usually trade a buy position above that centroid area of 11418. So this is marked at 114.18, but we need to apply the principles of psychological numbers. So I would be looking at 0.18 after the decimal, 0.18. 18 is closest to 20. If you want to trade, it's best to trade above the psychological number at least by 10 pips. So the closest psychological number is 20, above 20 is 30. So 114.30 would be a better ideal price to buy. Okay, so 114.30. All right, so we've got 114.30 right there. So that second line above would be an ideal area to have bought. And those who have bought, that's brilliant. Now we've got prices a bit higher and it's trading at 114.60. And it's above 50, it's showing a bit more momentum to the upside. Let's look at behavior of candle right there. And as you can see, let's just do that. You can see that you've got loads of bullishness, bullish momentum, found correction, okay, and then found correction again. But as you see, all these correction prices falling down just got a little shorter and shorter, but you've got longer and longer candles, stronger candles to the upside. Bullish candle is proving to be bigger and bigger. Okay, so this is basically it. Now here, if you are looking at this area itself, you've got another A, B, potential C, and then D to the upside as well. So if you want to draw that too within a very big pattern, you could potentially find smaller ABCD patterns pointing to the same direction. This is what we want. So here I'll just mark that for you. You've got potential A, let's say, another B, but the C has not actually touched either one, but you've got prices already above all three lines. So that's quite an okay sort of indication as well. So I'll just mark that A to B, B to C now, sorry, and then you are projecting your AB equals CD all the way up there. Okay, I'll just reduce the size in a bit, and let's go all the way up there, right? And let's reduce that. As you can see, you've got that big move, okay, that bigger ABCD is projecting there, okay, but then you've got a smaller ABCD that I've just drawn in yellow projecting there. So again, it's to the upside, but that could be your short-term type, right? So as you increase the size, let's say you're looking into trading at this moment in time, you can always use the smaller ABCD to then help you understand where could you then enter as well. Okay, so again, it's marking another center point right in the middle, and I will change that center point line for the yellow ABCD in yellow. So you know that that centroid, yellow centroid would be for the yellow ABCD pattern. Okay, so there you go. It's still marking above that line would be a nice area to have bought, but I wouldn't be buying, let's say, at 114.51 because 51 is too close to the 50 side number. So I would only buy above 10 pips of above by 10 pips above the psychological number at 60. So 114.60 would be my ideal price to have bought. But as you can see, you've got price coming back and then finding it to weaken, and perhaps it's finding a bit of a correction before it goes up again. So you've got your short term right there, and then you've got your longer term right there here. So you've got, you know, your first entry would be much earlier, aiming it big, and then you've got a second entry, shorter one, aiming it at a shorter period of time. So this is another way to actually trade your geometric patterns, whereby a bigger pattern would then give you some smaller ABCDs in within that move that you are trading. So that would then confirm and at the same time help you trade in stages. Okay, so you can trade in smaller pips, but then you're aiming at the same direction to this area here, but you've got all these small patterns making up the bigger pattern for you. Okay, so the bigger structure is usually built by smaller structures. All right, so that's your USD JPY. Now let's also look into GBP USD because we have got quite a number of interests there. As I see from various bank reports as well, you know, they've got the most recent interest was selling at 1.2215, and they want to take profit at 2115. So that 2115 area, let's just see. Now we still find lots of resistance here. We're looking at 1 hour chart for the GBP USD, and we find that it's finding resistance at the 50 moving average. We've got some challenges there that would act as the resistance level, either this line, or this line here now at this moment of time. Okay, because we've got prices coming up, but it's then finding resistance there. So let's mark the take profit area of 2115. Okay. This is what they're aiming for. Whether most of the experts or bigger banks have actually exited or not, we don't actually know that for sure. But that was what they marked off there. Okay, so it's still got some room there, perhaps until we find that to be a strong resistance coming downwards, then we can find an ABCD and then aim that downwards as well. So if we go onto the 5 minutes chart and treat the lower time frames, especially from the 5 minutes chart onwards, as little bricks that would make the picture, the bigger picture of the larger time frames. Okay, so here itself you can see 5 minute chart, you got prices all above, they have gone above all three time frames. Okay, but here we need to then check on the 15 minutes chart as well, and you can find that you're finding resistance right there. Okay, you've got challenges, you're finding resistance right there. So there may be a possibility of the sellers pulling prices downwards. And then on the 30 minutes chart, you could see it's the same thing. It's finding resistance once again. So from the 15 minutes right to the 30 minutes, you have not seen candles or prices above all three lines, and that is a very strong sort of downward move or momentum. So this is giving me the idea that the 15 minutes, 30 minutes is still showing the momentum to the downside or bearishness for GBP USD. So as we move on to 1 hour chart, let's keep this order right there. And when we move to the 1 hour chart, as mentioned, you see that you've got all this resistance at this line right there, starting from very top there, and it's gone all the way down, and now it's found a little bit of increase in momentum to the upside, but then found resistance again, and still is challenged by that 50 moving average. So again, on the 1 hour chart, same story, looking at bearishness. As you go into the 4 hour chart, you could find that the bearishness has actually gone stronger on the medium term or 4 hour chart. So on the 4 hour chart is giving you the hint that the GBP USD has potential to go weaker and weaker, or more and more bearish, because you find that you've got loads more candles that are bearish than they are bullish. Okay, they are all under all three lines, and they've got a very nice 5 o'clockish type angle down, and that angle down is giving us hints to the strength of the downtrend or bearishness. Okay, so this is for the 4-hour chart. As we go into the daily chart, and we can see that that momentum is still continuing to the downside, and you can see that you've got the least participation by buyers. You don't see much of the bullish candle, but stronger and bigger or long bearish type candle or candles that are giving you hint to the downside. So there you go, you've got it from the 15 minutes right down to the daily chart. Is still giving you the hint that the bears or the sellers are getting stronger and stronger and pulling the prices for GBP USD to the downside. Okay, as we go on to the weekly chart and the monthly chart, you get the same picture. You can only get more and more bearishness. Okay, so then we go back to the 15 minutes chart. You get that whole story build up. That means from the very short, there definitely is some correction to the upside, but then prices are going down. As you move on 15 minutes, the trend goes stronger and stronger to the downside from 15 minutes right down to the monthly chart. So this is giving me a hint that there's only more selling opportunities, not buying opportunities for GBP USD, if at all you're a trend follower or a trend trader. Okay, so if you're a trend trader, you follow the trend, then you know that you've got a bigger opportunity to the downside on the selling side of things for the GBP USD. Okay, and this is what we want. Of course, you will get lots of correction to the upside and things like that, but this would be also trading anti the trend in some ways or another. It's not wrong, but some of you guys who are skillful in it and are really confident in doing so, you know, they could be trading that way too. Okay, majority of traders. So let's choose a neutral type time frame. Let's say it's the 1-hour chart. Now here itself, because it's to the downside, you want to look at patterns, ABCD pattern to the downside as well. Okay, so ABCD pattern, if the trend is down, then you want to look at ABCD pattern to the downside like that. So that's your A, that's your B, that's your C, and that's your D. So AB's length could be equal to CD's length. Okay, that's your number one rule in estimating or forecasting where the D point could end up to. Okay, so downside, downward ABCD. If at all the trend is to the upside, then your ABCD looks like this. That's your A, that's your B, C, and D. Okay, hope that's clear for you guys. So we'll erase that drawing, give it a second. Now here itself, you've got some kind of resistance there. Prices have dropped, let's say from here. You can always pull your A from there or A from there, it doesn't matter. Okay, what would decide where should it be pulled from depends on your Fibonacci later on. Okay, now when I pull my A all the way down to B, I would like my C point here to be a minimum of 38.2. Here it hasn't even touched 38.2. Okay, so you can lower down your A down there or that peak there. This would be a better one. Okay, perhaps this one here, okay, would be a better one, because as you lower the A point, it goes to a sharper and better Fibonacci ratio, like this one here, 50%. So I'll take that one now as my A. So I'll just adjust that and do it that way. Okay, so it's very flexible. I mean, this system of trading, it all depends on Fibonacci, and Fibonacci ratio should be telling you where should you be pulling it from, and that does make the C point as the main decider of that. Okay, so now I've chose my A from here, because when I pull my A to B, I get a very nice sharp landing of my C point at 50%. If I have pulled it higher, it was not as sharp. So I chose that point there now as my A point here. Okay, so then I would do it like that, and that's my B point right there. Okay, B, C, highest point. Okay, and all you need to do is take your AB all the way equals to CD. Right, so here is giving you a little bit of room, saying that that is your next potential of where prices could come down to. Okay, so I'll take that one away. So AB be right there. I think it was that one. Okay, let's just decide that again. Yes, okay, so one notch lower, so it's that one there. So that's my A, B, C, and D. Right, now because it's 30, it's 50% here. 50% usually gives you about 200% of your Fibonacci extension ratio. So all you need to do is pull your B to your C right there. Okay, and now you would be looking for your 200%. Okay, so 200% is right there, and that was really close to the AB equals CD, right? So where would you have entered? You would have entered at the centroid area by pulling your A to D, and your centroid area has been marked right there, here. Okay, so it would be under that you would have sold much earlier. You'll be taking profit at that area there at 2128 or 2130. Make that 2130, which is 10 pips above the 20 psychological level. So you would have exited at 2130, okay, by entering at under 2259. So an ideal price would be 2240, and you would have taken profit there. So here, for example, if you are into the sell, then you want to wait for prices to go at 2170 at least, okay? And then you can take that little window to go down about 30 pips or so, 40 pips to look into 2130. 40 pips at least. 2130 is your ideal take profit area. 2170 is your ideal entry area. Okay, not much left, but if you have spotted that earlier and known of the trend for GBP/USD to be to the downside, and you would have entered earlier once prices has crossed and gone under the centroid area here of 2259 and lower. Okay, so that's your GBP/USD. So there you go. I've shared with you guys a couple of trades there. I would like to then go further into gold. We have taken profit really nicely for the ABCD that we have spotted for the gold on the 1 hour chart. Taken profit here, entered at the ABCD centroid area right there. As you can see, prices have gone under. It's going above to test that area right there. And we just need to look into the strength of the dollar to look into negatively correlating that to gold. So the stronger the dollar, the weaker the gold. Okay, so it does actually depend on what goes on in the States, Trumponomics maybe, as they say, and then the economic situation in the States, and then the strength of the dollar. Okay, so tomorrow, if I'm not mistaken, is 10th of March, which is the NFP day. So then that would also be shaking the market a little bit and impacting the dollar quite a bit. So with the ADP and fundamentals, it has shown lots of positive sign. So then it would give us a bit of a probability to expect positivity from the NFP tomorrow. If at all that positivity persists for the NFP tomorrow, then this would then give more opportunity or chances or probability for the Federal Reserve to hike up or increase rates, which will then look into more and more push to the upside for the dollar. Okay, now let's look at this. I've got some question here. Please share the PRZ line for the GBP USD. Yes, no problems. Let's go back to the GBP USD. Now, GBP USD, if you're talking about the PRZ line, then you want to look into a very slim here area that one is your AB equals CD, correct? Second one is your Fibonacci. Because I pull my A to B and I look at 50% to be my C point, what you will then do is pull your B, let's see, your B to C to look at your 200. So you will get two options right there. So here you've got a very slim area, okay, a very slim area there to be your PRZ. Okay, you've got two options of your D point. Okay, so that would also be your area of take profit and your area of your potential reversal zone. But what you can also do is when prices are coming down, you need to look at when prices have actually gone up in the past. So what you then do is you reduce the size, and you want to always look to your left. Okay, you want to look to your left, and you want to look at the area that you have drawn as your personal potential reversal zone from forecasting the D point, where has it actually gone up in the past. So this is where it's very important to look at. As you can see, there were quite a number of strong support zone very close to the area that you have drawn. Okay, but as you look into this family of candles here, you want to look at that area there, and then you can look at the lowest body. The lowest body you can see is this one here. You can do another line based on that one there. Okay, you can also do that based on the longest candle you can see in that family. There's another one down there, which is this area here. Okay, now this, then once you do your support resistant area or zone like that, you can then get that area as your PRZ area as well. Okay, so here when you have done that, you can see that it gets clearer, telling you how these candles, most recent candles, have found support in either one of the line. Okay, because you get all these lines by just drawing your support resistance levels based on your previous price, where prices have gone up in the past. That is how history may repeat itself by going up again in that level. That is how you get your support resistant areas as well as your PRZ zone. Okay, so that PRZ zone based on these yellow lines could then be marked by this little blue box here. Okay, so that blue box made by the horizontal yellow lines given you that PRZ zone. Hence the reason prices start to find support exactly on the dot on either one of that line that you can see. Okay, so now prices is going upwards 1.2181. Now you need prices to go to 2190 and above to find more power to the upside. But as it finds power to the upside, it may then find resistance again, because you see that it's very close to the 50 moving average here. Okay, so that's basically it. Now that is GBP USD. So you can see that loads and loads of support here. You see how it's all mirrored. Okay, it's all mirrored. You see that it found support here at this PRZ zone because it has found a lot of support here previously in the past. As you go further back in history, you find some more resistance, some more support, some more support, some more support. So that is then telling you that this area here may be a very strong support zone that will limit the downside move of GBP USD. It may start to go up now. Okay, but how far up? Again, if you are looking at prices going upwards like this, now it's going up, correct? You need to look to the left and see where has prices gone down in the past. Okay, so let me just do that again. Erase all drawings. Okay, so here, for example, did prices fall at all drastically in the past, close to the prices here? No, it's only got support. Okay, but further up, you've got some here resistance, some resistance, but they are not very, very strong. Okay, as you go on, okay, as you go on further and further and further back, you don't find any areas in the past where prices has fallen. You have only seen prices have gone up. So what does that mean? That means that there are buyers trying to push prices up much more, and they've got more chances because you've got more rise up of prices and no falling, not too much of a falling until prices reach this zone here. Okay, so once prices have reached this area right there, or this area right here, because from here it has fallen a lot, from there a lot of fall as well. So, and then it also started from here opening price it fell, here opening price it fell, and there opening price it fell, correct? So this is a very, very powerful area for a big fall, okay? And but here the closest that you could see that it start falling quite a lot is this area right there as well, okay? But again, if you look up, you could see this area right there as well, okay? This is one area here, let's say, okay? That's your support resistance area, and then some more significant fall as well started there, okay? So now, as you see, it becomes like a map, okay? Let's go on and mark it. Okay, there you go. So now it should be clearer on all this support resistance zone or area that gives you an idea where you would find resistance and strong resistance. So now if prices does go through and through and through, let's say, it may find resistance at either one of these lines. But if it does go through it, then it might then look at this major area as resistance. If it does go up again, then find this area as a resistance that push prices downwards like that. Okay, so there. Okay, so up, resistance, down a bit, and then up again, resistance, down a bit. So it does depend. Maybe find resistance here all the way down or not. We don't know that, but it's got a sort of move to the upside now, but challenged by the resistance lines of the moving average. Okay, hope that's clear. Okay. So hope that's clear, Mr. Kunan, okay? This is just to give you a bit of a roadmap, what's going on with prices. But price action itself, 12182, very, very risky price. You need prices to, if you want the price themselves, the prices itself to tell you whether it's going to be stronger or not to the upside, then it needs to cross and go above 2180, because 80 is a psychological number. It needs to go above that to give you more power to the upside. But now the power may be limited because you got three areas that is a risky area. The 50 moving average, the 200 moving average, and the 200 moving average, and the 100 and the 50 moving averages. So you've got these three areas that price needs to go through and through and through and gone above all three lines. Then you have got this area of support. You know, you got a more of a bullish momentum. But again, some more risk here. So all these areas that I've drawn, this square here, another risk resistant area. This 200, this 100, and this 50 are all resistant area possibly. So it's got a lot more challenge to go up than to go down. Okay, so let's wait till prices give you that clearer hint which direction it wants to go. Then you look for the right pattern, then you enter. Okay, all right, good. Most welcome, Mr. Kunan. Okay, so we've seen that GBP USD. Perhaps you guys want to share a bit more and tell me more pairs to look into. If not, then we'll just look into gold first, okay, before we go further into other pairs. So let's go on to gold. Now, gold is showing really nice bearishness. I'm saying very nice because it's followed the pattern very nicely. We had a what do you call that? A W-like pattern. I mean, if we get that one away, we will only see the ABCD pattern. But because we've got a very big move before that, we attach that and it becomes a W-like pattern. We were trading from this point C to the D, somewhere in the middle. How did we know where to actually enter the trade for the buy? When we attach this line from A to D. We entered at that blue line at 1205.30 and above. Okay, at 1205.25 and above, we bought from that area and we exited before it reaches that PRZ zone. Okay, and then we entered again for a sell, and now we're taking that sell, and we are again profiting just before it reached the 1205 area at 1200 1900s. Or so, okay, so 1100. So that's basically it. We have taken that. Now we're just waiting for prices to give more hints. Now as we go on to the 1 hour chart for gold, we had a short-term sort of sell based on the 1 hour chart. So it was clearer in this area to look into an ABC. The C actually found resistance at the 50 moving average. So then we entered at this area at 12:30, okay, and then we sold and we took profit before it reaches 12:09, 12:10 something, or 12:09.60 or so, 0.60 to do that psychological number tweaking. Okay, so that was a very successful one. Now, again, it's finding resistant more than it would actually find support, okay, because it's on the way to the upside, but then you've got all this resistant area. Let's look into questions first. Sure, Ganesan, we'll look into CHF JPY in a while, okay? So CHF JPY, let's look at what's going on CHF JPY. Okay, so that's your goal on the 1 hour chart. It's a little bit on the risky side at this moment of time. Let's just look into a little bit on the daily chart. It's still giving lots of bearishness at this moment of time. Even if you go onto the daily chart, you can see that you've got bearishness picking up. Okay, so that bearishness is still picking up, and here it's probably best to look into currencies at this moment of time, as it's not given marinated that strength or that exact direction for gold. Okay, it's quite you know, unpredictable. Even though there's quite a number of traders, I think, looking into selling, into buying and things like that. In my opinion, it may be a little bit too early because you're finding more potential strength of the dollar, and you can see lots of resistance that has already been alerted, hinted at very important levels as well. Okay, so then I see the weakness as well of the bullishness, and then finding resistance and things like that. It's probably not an instrument I would look into just at this moment of time. Okay, but because I just want more marination of price. So let's move into CHF JPY. Let me see whether I've got CHF JPY on this side of it. All right, give me a second. CHF JPY, definitely an interesting one to look at. Let's do that. CAD, okay. I think I need to do that again. CHF JPY. Okay, there you go. So let's look into CHF JPY. Let's start off with a neutral time frame right there. We could see this one here. It's quite nice. The moment I look at it, you know, we see a lot of bullishness, yeah, because it's above all three lines. It found support twice here, 3 times. 1, 2, 3 onto the lines, and that's a good sign. As soon as I see that upward move, most recent upward move, I see a down and then an up. I see a potential A, B, C, D. Let's mark that very quickly and look into A to B first. Okay, so we are looking into the upward type momentum to the upside. Okay, but before anything else, let's look at the 4 hour very quickly. Look into how far candles has gone above all three lines. That looks like it has found its way upwards. That's a good sign for bullish momentum. Daily chart is just finding support as well there. Okay, as we increase that price, you can see that's finding support. It's gone above as well. So okay, we've got a bit of a clearance in terms of an upward type momentum or uptrend. Okay, so let's draw that pattern very quickly. A to B. Now it's B to C right there, correct? Now we want to project D, so what we want to do is how far can that C to D move? So we equalize AB's length and CD's length. So AB equals CD, you get that ABCD pattern right there. Okay, where would you actually be entering a buy is from C to D, but where exactly would then be at the centroid area where you attach A to D, and then you look at the center point area right there. Okay, so you've got a center point right there. Okay, now you've got a center point. Now when you have that center point or centroid area, you see that the exact support area was at the centroid area. Now this is something very interesting. When you go into the 4 hour chart and based on that centroid area, just follow through and you can see that that centroid area is as well automatically, usually, a support resistant level. as well. As you can see, found resistance there, found support, found support. As you go back, you can see that centroid area has got all this concentration of price in that area as well. So that's a good sign. Okay, that means that level is drawn quite nicely or accurately based on important or significant levels. Okay, so as we go on now, we're looking into the 4-hour chart, but let's look into the 4-hour chart. You can see that the candles are stronger, and on a bigger time frame, as the candles are stronger and longer, bearish candles, that gives you a sign, that should give you the sign that the bullishness is bigger in momentum compared to the bearishness. Okay, so 1-hour chart, and go back to the 1-hour chart, and we can see that has projected a potential D point right there. So prices theoretically, based on this pattern, could go up to this area here at 113.59. You've got between 0.2625 or so right to 59 as your potential area. Okay, so for me, because I look at 26 going up and up and up, I see the 0.40 area as my possible exit area, because I would like to exit before it reaches 113.50, because 113.50 is your psychological numbers area. Okay, so CHF-JPY, a little bit of space. Just to summarize, Mr. Ganesan, for you, you've got a little bit of space to go upwards. You can target the 113.59 or 113.60, but to be on the safer zone, you are too close at this stage from 30. If it is going up, it might start to weaken very, very fast or very, very easily at 113.50 area, because 113.50 is your psychological level. So what I usually do is, if I am buying, I would like to exit 10 pips below the 50. So 113.40, you should be getting out already. Okay, so you can always do your TP area 113.40. Okay, it's better to take less than to be taken out totally. Okay, so that's basically more important than anything else. We want to always focus on the risk, not the profit area. The risk first, and let the profit area and the profitability of your trade take care of itself. Okay, so there you go. So you've got A, B, C, D is aiming up there, and then you got your C, D, and you're trading from C to D. Could easily have entered earlier as well at 112.90, let's say, and then take profit, because 112.80, you want to always buy above the 80 side number by 10 pips. So 112.90 could potentially be your buying area or your entry price, and then now it's 113.50, your take profit area potentially, but you want to take profit before, whether it's 5 or 10 pips before 50 is entirely up to you as the trader. Okay, all right, there you go. Now another thing as well is that from the way it moves here, you've got another A, B, C, D. So let me mark that for you, just so that you get more confirmation of where you should enter, where you should actually exit, and things like that. So okay, do it in red so you get an idea. So there you go, A to B, yeah, C to D, there you go. So again, it's marking another area right there, and I will mark that red ABCD, red color. Okay, red horizontal line as well, just so that you don't get confused. Okay, there you go, and we'll just mark that here, A to B, yeah, and B to C right there, just to give you an indication that you've got another ABCD pointing up, but again, you've got a risk area there. Now look at this ABCD, it's marking a horizontal line exactly at 113.40, which was where I mentioned I would exit, because that is 10 pips under 50. So you see, even this is giving you that idea. Okay, and you can always do that as well. And finally, center point for the red ABCD is right there, 11302. Probably best above the 00 area, 11310 at least, to enter, if at all you're looking into this smaller. The smaller the ABCD, the smaller the potential profit. Okay, the bigger the potential profit. But the bigger pattern usually have smaller patterns like this one here in within it. So you can always take it in stages. When I say take it in stages, I mean trade smaller patterns within the big pattern, so it gives you the guideline, because these smaller patterns are the one that builds the structure of that bigger pattern. Okay, so that's CHF JPY. I hope that is clear for you, Mr. Ganesan. Okay, I wish you all the best. Happy pipping for the CHF JPY and for the rest of you guys as well for the other pairs. I've covered quite a few here, including gold too. So perhaps you guys want to ask more questions. Okay. Most welcome, Ganesan. So any other what do you call that pairs? Do ask if you've got any other pairs that you would like me to look into before we end it. I think we've not gone into GBP JPY, so maybe you guys are wondering what's going on with GBP JPY. As you can see, it is now giving lots of hints to the upside. It's gone really high. 15 minutes giving you lots of momentum to the upside. GBP USD, it is finding support and then going now higher. Okay, we want to know how high could it go. The reason for that is because I've mentioned in my Telegram group last, I think a couple of days ago, if not mistaken, about the, I think day before yesterday or yesterday, sorry, about NOK, the Norwegian krona. Okay, so there's a lot of buying going on with the krona, the NOK. Okay, Norwegian krona. So when you attach the Norwegian krona, sorry, with the US dollar, then you are actually selling the USD and buying the NOK, right? So USD NOK. USD NOK or USD NOK is actually correlated negatively with the GBP USD. So if a lot of people are selling USD NOK, that means that investors are also buying GBP USD. So because that signal has just come out just yesterday, late sometime, if I'm not mistaken, we see that a lot of investors are selling the USD NOK, selling the USD NOK. So that gives some rising potential of buying the GBP USD. So maybe that is a reason why we see a little bit of pickup of price from, you know, from this area here, now picking up slowly. As we go onto the 5-minute chart, you can see that it's reflected as well in the short term how much price have picked up. Okay, and it's still picking up as we move on 30 minutes. It's still picking up, it's going through or piercing through one moving average at a time, and this is giving us the hint that GBP is picking up. Okay, so as it picks up and gone above that blue line 200 moving average, I think we've got more room to see upwards, because the USD NOK, they are expecting a 400 to 500 pips fall. So that 400 to 500 pips fall will see a potential at least 200-300 pips up for the GBP USD, but it's still too early to tell whether or not GBP USD will just rise up so much. You need to look into the chart, look into fundamentals, and marry them together. On the chart, you need to see prices going above all three lines in most time frames. Okay, if that does happen, then you might then see more and more positive news coming up to actually back up that move. And when that does happen, then you've got an opportunity for buying the GBP USD. At this stage, very uncertain GBP USD, because prices in between all three lines, not a good sign. Okay, so let's look at questions. CAD JPY, says Chris. Okay, no problem. CAD, that is JPY. Now I think that's the one I had trouble looking for on the MT4. Let's see. CAD CHF right there. Okay, CAD JPY. Okay, no problems at all. CAD JPY right there. I think it's actually mirroring what we've just seen as well. It's CAD JPY. Let's start with the 1 hour chart. Just by looking at it, I must say that I'm not a fan of trading anything, any instrument, when I see prices going between all three lines. As you can see, if I zoom in, you see these candles are inside three lines. They are not under, they're not above. They should be under or above all three lines. When they go in between and they start to go in within this zone of the three lines, it is giving you uncertainty. Anything can happen anytime kind of thing. Okay, you've got prices going upwards, but again, within the zone, you can see some resistance here at 80.05, which is very close to 85.00. Okay, now prices at 84.97, very close to 85.00 again. So if you want prices to come under, it needs to come under. If you want prices to show you a downtrend, it needs to come under this area of the 50 moving average and below. Okay, or go under 84.80. Now where is 84.80? 84.80, let's mark it first. Okay, 84.80 is your psychological level. There you go. That's 84.80. It needs to go under that to give you that. It needs to go 85.10 at least, your 85.20, 85.10. Let's see, 85.10. Okay, at least, yeah, needs to go above 85.10 at least, or better still, 85.20 and above. Sorry, okay, 85.20 and above to show you the uptrend. So look at how far it is. It's now, it's got this confusion area right there. All these are confusion area. Now it is in within as well, in within the three lines. Okay, so I'll mark that confusion area right there. Okay, this is confusion area, just based on price psychology, based on 85.20 psychological number. Okay, because 20 is your psychological level, or 85.00, because 85.00, let's mark it as well. Okay, 85.00. Okay, it's inside here, right? Price is too close to 85.00 to the upside, yeah, and too close to 85.80 to the downside. So let's wait till price, and it's in the middle of all three lines. Let's wait till prices does go up above this zone or under this zone. This means uptrend, this means downtrend. So now it's just too confused in the confusion zone, marked in blue. Okay, so if I take that one away, okay, now you understand that this is where we are trading at. We are now looking at price in balance. Price is in balance. It hasn't broken out yet from the confusion zone or the uncertainty zone. Prices is trading at a 3 o'clock angle for the CAD-JPY. This is based on a 1 hour chart. Do we see a better clarity on the 4 hour chart? A little bit better. We find more resistance. We find the three lines pointing down. So 1 hour is confused. Okay, 4 hour on the medium term has broken out to give you a biasness, a direction to the downside. What about the 30 minutes? 30 minutes, what is it doing? Still in within confusion zone. 15 minutes, confusion zone. 5 minutes, purely confusion zone as well. But then you've got a potential lower low, yeah, a lower high. You see this high is lower than that high, giving you a biasness to the downside. So that does sort of marry with the longer term, because you're looking at shorter term, all of it confusion zone, but then it's giving you a biasness to the downside, because 4 hours giving you better clarity, and daily chart, again, you've got a confusion zone, but 4 hour chart, you've got that. That means there's some movement to the downside, maybe not a lot, because you'll go back to confusion again, because the daily is giving you that confusion again. It's in between the three lines. It's not a good place to look into trading. And then you've got the weekly chart and the daily and the monthly chart as well. It's just not very, very clear. The monthly, very, very long term, is still showing some candles under the 3 zone, which gives you a bit of biasness to the downside. But now For this pair, it's not a pair I could get lots of confidence on the direction, except for the 4-hour chart that gives me some resistance. So let's wait till whether or not prices goes under all three lines. I would say under, it's got a better biasness towards the going to the downtrend compared to uptrend, because uptrend has got more challenges. You see, you've got that line. If it does go up, it's got the 50 moving average, 100 and 200 to battle with as well. But to the downside, it's a less trouble. Okay, so if we look to the left, always look to the left. You will see that the troubles has got the support, big support zone here, big support zone, some more support zone here. So once it goes under, that means the support has become resistant. That would be a good sign for prices to come down much more. Okay, as it comes down, down and down and down, you will look left, you will see that it may have a challenge here to be going up around this area as well, because that is a big support area right there. Okay, you got a bit of support here as well here. Okay, so again, some support here. Right. Okay, so you want to look at the not only just a support but a zone. Okay, a zone made up of many lines, and that many lines has indicated this two zone here as a very powerful support zone, as well as there you've got some support has pushed prices up in that zone. So you've got 1, 2, 3, some more a little bit here, 4, and it needs to go above or under. Okay, so that's basically it for the CADJPY. I hope that is clear for you. Okay, Ganesan, on this one here. Yeah. Okay, that's basically it. So that's laying out the price action, the support resistance zone as well for you. I don't see any clear pattern. When I don't see prices breaking out of the confusion zone, I rather not draw patterns. You want to draw pattern when your trend is clear, then you find a pattern for that trend. If it's clearly bearish, you find a nice, clear ABCD bearish one. If it's a clear bullish trend, you want to find a clear, nice, bullish ABCD. As simple as that. We want to keep it simple. Okay? All right. There you go. Hope that is clear. Now, let's see. Questions? Okay. There you go, Chris. Okay. CHF, sorry, I think I've mixed up the pair. CHF I've seen. CADJPY, sorry, that is for Chris. Sorry, Chris. There you go. That's for Chris. So hope that's clear for you, Chris, as well. Good. Okay. Any more questions? If not, I would like to wrap up here and then see you again next week on Monday. Okay. So I'll be moving, traveling to Malaysia very soon, but I will still be doing my webinars from Malaysia and Singapore when I'm there. So starting next in 2 weeks' time, I'll be in Malaysia from the 22nd of March onwards. But I'll not be cancelling any webinars. I'll still be doing and reporting live from another country, and so that you guys can get a chance to look into the charts, and we share ideas on geometric patterns as well. Okay, so for those of you guys who are in Malaysia and Singapore, you can always check with me. Email me at kenny@fxgeometry.com, because we are organizing some events in Malaysia and Singapore. So starting from the 23rd, 26th onwards, 24th onwards, we do have a sort of a session live, a meeting session, FX Espresso, we call it, in Singapore. Okay, so we can confirm all the timings and the venues. You can just email me to request that, and then we shall confirm that with you. Okay. All right. If you've got no more questions, then I think it's best if we wrap up here. And just want to wish you guys happy pipping. Hope you guys find today's session useful in pipping your pips. Okay, for the pairs that you're trading. All right, there you go. So wishing you all the best for the week ahead, and for the next week, to meet you again on Monday. So the next webinar live will be Monday. For those of you who have registered for this one, I think you've registered for all of the webinars on in March. Okay, so that's it I've got for you guys, guys and traders. We will see you again on Monday. So again, have a brilliant evening ahead of you, and thank you very much for attending this webinar today. Bye bye.